Hi friends, I am Esther from Group 8A and today our group is going to present to you on the topic of test of controls. These are my members, Alex, me, Vanessa, Felda and Verity. In this presentation, we will be reviewing RPL's internal controls, activities and policies to assess if they are adequate. Firstly, I'll let you guys know about the background information of this case. Rogers and Brown has taken over the audit of Reliable Printers Limited (RPL) from Jones and Associates for the year ended 30th June 2015. RPL provides publishing materials for the educational and advertising industries on a print-on-demand basis, which can print exact quantities from the demand they receive from retail outlets, instead of having to estimate in advance the number of books required, resulting in an over or underestimation. Recently, RPL further expanded its earning potential by allowing its publishers' title available as searchable ebooks that are obtainable for download directly from their website. In year 2015, RPL's new CEO William Jackson integrated a new IT system that would automate the entire accounting process in the organization into the general ledger system. However, due to the lack of manpower and excess pressure, there were problems with the reconciliation and testing of the new system prior to the implementation, resulting in accounting errors.
Key auditing concept. Key auditing concept is divided by internal control policies and audit control policies. Internal control is the policies of an organization that together facilitate effective operations by enabling it to respond flexibly in different business situations to achieve its objective by ensuring the quality of internal and external reporting. As for audit control policies, we are using audit control objective and assertions alongside with the control policies in order to determine the effectiveness and efficiency of the task control. Next, audit control policies. In audit control policies, there are three assertions that affected audit control policies. First is transactions and events. Second is account balances. Last but not least is presentation and disclosure. In transaction and event assertions, there are several tests that has been conducted. First is occurrence, which means that the transactions that have been recorded are true and pertain to the firm. Next is completeness, which means the transaction that should be are recorded. Accuracy is the amounts recorded that are appropriate. Cutoff means that transactions are recorded in a correct period. Last but not least is the classifications. Classifications means that the transactions are recorded in a proper account. Account balances assertions. Existence is one of the tests that has been conducted in account balances assertions. In existence means that assets, liabilities, and equity exist. Next, rights and obligations. It is to ensure the entity holds the entitlements to the existing accounts. The next test is completeness, as what I explained in transactions and events assertions. Last but not least is valuation allocations, which means that all formulas included in accountant's report are appropriate and resulting valuation adjustments are appropriately recorded. The last component of financial report assertions is presentation and disclosure, and the tests that has been taken are occurrence, rights and obligations, completeness, classification and understandability, which means that financial information is appropriately presented and expressed. Lastly is accuracy and valuation. Internal control policies. There are a few elements in internal control policies. Physical safeguard is measures policies, and procedures to protect a covered entity's electronic information systems, whether it is company information or customers, and also related building and equipment from natural and environmental hazards and unauthorized intrusion. Authorization and approval limit is to give limit to certain people to prevent fraud happen. Segregation of duties is when the company should assign more than one person in charge of banking transaction. Proper safekeeping and retention of records means that the company need to save records includes cash register tape, daily sales record book and invoices, as well as expenses or claims. Supervision of operations means that somebody needs to monitor and regulating the process that the employee do. Last but not least, it's a top level reviews. So in top level reviews means that the company will need to involve the top level management to do meeting and discuss the company problem with them. There are several tests of internal audit control that has taken place. IT application control, cross-check invoices, check the authorized signature, manual controls, observe and inquire batch postings, check the indicated transactions, and my groupmates will explain the details about this test.
Now, we'll be moving on to identify the internal control activities as well as design an appropriate audit procedure to test the controls. So firstly, the IT application controls are automated, and thus the controls that needed to be tested for are control over programs and control over data. To observe and ensure that the restricted access to all except authorized personnel, the use of restrictions to data files like passwords or other encryption methods, and constant backing up of data is being carried out should be observed. To ensure that the program and its formulas are working appropriately, we need to go through the relevant code in the program to ensure that the processing steps are logical and ensure the accuracy of the transactions that the IT program has been made. Furthermore, we need to select samples of disapproved debtors and trace back their previous invoices to ensure against the AR records that their debts have not been paid. Thus, this will prove completeness. Secondly, if internal controls are not met, the approval of outstanding debtors would increase the short-term debt and decrease cash flow, causing issues of repayment of creditors in the long run and negatively impact the statement of financial position. Next, we'll be moving on to IT manual controls. For manual controls, we should observe that authorization and approval limit, supervision of operations, segregation of duties, and top-level reviews are in place. These activities would ensure occurrence as well as rights and obligations. Through review of the approval documents for authorized personal signatures, the approval should be accompanied by valid reasons or collateral, which would ensure guarantee of repayment by debtors. However, if the control activity stated above fails, it could lead to material misstatements from collusion or internal as well as external parties, causing the firm to increase its bad debt expense, leading to unprofitability in the long run. To ensure that the accounts receivable clerk has checked the prices and the invoices, as well as signed the invoices as evidence of a check, we need to check past invoices for similar transactions and cross-reference them to the current invoices, ensuring that the same accounting policies have been applied, as well as proving valuation and allocation of the prices. Also, we need to double-check the current market prices for the goods to ensure that the amounts stated are updated and ensuring accuracy in the invoices. Next, we need to observe that the invoices bear the AR clerk's signature. They are numbered and are filed in sequential order to fulfill proper safekeeping and retention of records, as well as classification. If prices and accuracy is not ensured, It could lead to fraud due to a difference in price of goods stated on the invoice and charged to the debtor. It could also lead to material misstatement in the long run if the prices are not updated, as the company will be charging below market rate, creating a lower CM and understating profits. To ensure that internal control activities are in place for the activity of the cashier reconciling the total of the batch postings to accounts receivable and the amount banked in for the day, we should observe and make inquiries about the entering of batch postings. Segregation of duties should be active for the cashier overseeing, collecting, as well as tallying the amount, while the accountant keys in the batch posting to the AR account, as well as the account supervisor reconciling the batch posting to the AR bank balance. After each process, each employee should sign off to indicate that the records have been checked and are accurate, thus proving accuracy, occurrence, rights and obligations. If segregation of duties is not performed correctly, occurrence, completeness, and accuracy could all be jeopardized, causing fraud, as the current process of handling cash is at a high risk due to one person handling the entire transaction. Next, to ensure that internal control activities are present for the assistant accountant preparing a bank reconciliation each month, we should ensure and observe that the assistant accountant indicates whether transactions have or have not been reconciled by using different colored pens, red for not reconciled and green for reconciled. These will create clear indications. Also, we need to ensure that he signs off on every document after he has completed them. This will fulfill occurrence, completeness, as well as accuracy in the test of controls. To ensure that top-level reviews are in place, we need to bring up the senior accountant and the managers to review the work after it has been done. This ensures rights and obligations that each role has been carried out. However, if top-level reviews have not been carried out, fraud or errors could happen, as the assistant accountant could have colluded with another colleague to record a purchase without it happening, or they could have left out important transactions that may lead to future material misstatement mistakes. Lastly, to ensure segregation of duties between accounts receivable as well as cash handling functions, we need to observe that there should be two different employees handling the cash functions to select a sample of invoices as well as the AR accounts to check for two different signatures. We also need to inquire about the process of banking in cash and the recording of the AR into the entity system. These activities fulfill occurrence where cash receipts are counted and recorded into the system. If there is a lack of internal control activities here, a high risk will be indicated, as there will be room for potential fraud as cash is handled directly. Thus, the control activities in place must be stringent.
Now we're going to talk about question 10.29, which is based on the selected invoices. So based on the information provided previously, invoice number 19052, 19053, 19055 and 19058 would be selected for sampling, as the invoice amounts are material to the AR account as a whole. Invoice number 19054 and 19056 will be considerable as well. Given that $40,705 and $5,000 is not written off or provided for, the auditor should evaluate whether the uncorrected misstatements are material, individual, or when considered with other misstatements accumulated. In making this evaluation, the auditor should consider relevant qualitative or quantitative factors. As the misstatement of $40,775 is not material, the auditor should test proper cut-off sales and revenue to ensure that invoices and receipts are recorded in the correct period. This would ensure that the uncorrected misstatements would not roll over to the next accounting period, which would reduce the risk of it being a material misstatement. A material misstatement would overstate profits, and it's unlikely that the overstatement could be offset by other misstatements.